traders, and welcome to a deep dive into pump and dumps. Pump and dumps have been talked about a ton in the cryptocurrency community. I've seen talk about various groups that are legit, various groups that are scams, referral links posted everywhere for pump and dumps. I personally find I think all pump and dump groups are probably not a good thing to join. Of course, use your own discretion. And this video is not supposed to be, join this or don't join that. Instead, what I did was I visited free pump and dump groups on Discord and Telegram. I'm not going to be saying any of the pump and dump groups that I did visit because that's, I don't really want to call them out. That's not what this video is for. And I recorded what coins they pumped, what coins they dumped, and at what times that they did it. And I also found a site that reveals these pump and dumps as well, which is right down here. And I picked one coin from that site that was revealed. But every example on this presentation is going to be from the chat of a Discord or of a Telegram of one of these pump and dump groups. So what is a pump and dump? Well, a pump and dump is a scheme, and what it is where the organizers or the leaders of a pump and dump group are going to be buying a altcoin, and then they're going to be announcing a pump is happening, and then the price of that altcoin is going to dramatically rise. And after the price of that altcoin dramatically rises, they're going to sell up here. And the reason why this works so well is many beginner traders are enticed into it because of the promise of massive reward of all these pump and dump groups. Some may show statistics of 80% of members profit or something bogus like that, or they might highlight one trader where one beginner trader joined and made 200% in 2 days, something like that. And they take advantage of the beginner's lack of knowledge with these schemes. And they also employ the near miss effect, where I read a few forums on these pump and dump groups, and in the chat, you can see so many members who just say each time, on the next pump, I'll just buy a little bit sooner and I'll profit. I'll just buy a little bit sooner or I'll sell a little bit quicker and I'll be okay. Because a lot of the time what happens here is one of two. One, where a trader buys and then the price goes up, they get happy and they sell. But when they sell, they find that the price they sold at was actually much lower than the price they'd even bought at. The second, which is far worse, is where they buy and then they are just going to sell when the price goes up, but the price never goes higher. The price just drops. But these groups are promising that they're just going to pump the coin. It's going to go to the moon, but they find that they're never able to sell that coin for a profit. And they either hodl forever or they just sell at a loss. And this is really how they're exploiting the psychology of retail traders for profit. It's a direct scheme with these pump and dump groups. So, overall, I would say try not to join any pump and dump groups. And the only reason I would visit these is just to look at them for data or to look at them for what not to do. Now, I wanted to take a strategic look at this. So what I did was I constructed two models, this one and this one. And I made these two models by looking at many pump and dumps. And I've included a few pump and dumps in here, as you will see soon. And this is just a quick explanation of what each of those terms means. So if you want to pause the video and just read this over, or you can read this one as well. So what this is showing is during a pump and dump, typically what we're going to see is a pre-pump, we see a pump, then we see a dump. So the pump is typically going to be under a minute, sometimes 2 minutes, and then the dump is going to be a few minutes or less than a minute again, and then we're going to get that post-pump ranging. So why that occurs is the first thing we have is a massive amount of buying and then a little bit of selling, and then this ranging is just going to be where some traders are still trying to buy very, very late, and then some traders are just trying to limit sell who had bought in the pump, and price is just kind of not really knowing where to go. And then price just slowly moves down, where we get a fall off of volume and just a gradual fall in price with typically lower market volatility. The example that I attached here pretty much shows that. As you can see here, the pump, the dump, some ranging here, and then the aftermath as price goes lower. So that is the first model that I had constructed. The second one is this one, where we get a pump, but this time we can sometimes also get a second pump, where we pump, we dump, we get a second pump, and then we go to that post-pump ranging where price just about goes sideways. And I actually think that this one fits the polymath one a little bit more. Pump, pre-pump, pump, the dump from the high to the low there, the second pump that went from here to here, and then we just fall down to that ranging, and then we get the aftermath. And that is really just about this model here. So these are the models you should keep in mind, and the cheat sheet of just those 6 terms that I had labeled before with volume and volatility and price change, you can take a look at those as well. But let's go take a look at a few examples. So this is XZC BTC, and I had actually gone to a Discord pump and dump group that will not be named, and I found the exact time, which was, as you can see, 16:05, 4:05 Eastern, that they had announced the pump. Price went up 56% in 1 minute, then immediately dumped, and then ranged. So this is really fitting model number 1, pretty much to a T, as you can see. Now, let's go take a look at what happened to XEC BTC after this time. So you may be able to notice that this was when the pump and dump occurred. This is another way you can find pump and dumps, is just to look on many altcoins and just look for, when you get those crazy high tails, and then you see that crazy drop immediately. Like this may have been a pump and dump here. I don't know for sure, but well, actually maybe. Price only went up 15%. This was for sure a pump and dump. I even saw it myself. This one went up a lot. And the aftermath of this was that price was able to go a little bit higher, but then price, just as you can see, just kind of went back down. So any traders who had bought in this range up here are still at a loss. Now, let's take a look at another. Wings BTC. So this coin went up 60% on November 7th, 2018, this year. And this one we had a pump, and then we had a dump, and then we had a second pump. So fitting the second model, second pump was right here. Then after that second pump, we went to that post-pump ranging right there. So really fitting the second model. And if we take a look at Wings BTC on the 1 hour, let's go take a look at where the price is at now. As you can see, the price head was at 34.91 there. Unfortunately, for anyone who had tried to participate in this pump and dump, price is down here at 22.88. So, we went from the high on the 7th of about 41.70 down to here of just, like a 45% loss if you had hodled around here. And we also got a minor pump occurring about here as well. And, you could even call this the second pump, but I think that would be on a more zoomed out time frame. But this was another interesting pump that had occurred. And I found Wings BTC. This is the one that I did not find it in a chat group or anything like that. I found it right here on this site that I had mentioned before. Now, NAV BTC, this was a coin that was mentioned in the pump and dump group at 15 o'clock, which is 3 p.m. Eastern. This one went up 130%. So any organizers had actually made a killing off of this. They had bought there and just sold at a beautiful, nice profit up there for about double their money. And many retail traders who had tried to buy this probably bought at terrible prices up here. So what models does this fit? This one doesn't really fit in the models as well because the second pump actually went higher than the initial pump, which typically doesn't occur. Why does this happen? Well, what may have happened is that first minute price went up, then price fell back down to this value here. Then a large trader may have market bought all the way up to here at these really bad prices, as you can see. And then price just went right back down. Maybe someone had market sold, and then price just crawled up to here on more of a second pump kind of traditional formation. If we call this initial pump and this the second pump, and then we get that post-pump ranging right there, and then price went down. So, this one may have been caused by a very thin order book, meaning not many limit sell orders here, or it may have been caused by a large trader trying to participate in the pump after, a little bit late, and then price goes up to there right above 900 before going lower. Let's go take a look at NAV BTC and see how it's doing now. Not doing well at all, as you can see, not surprisingly. So the pump occurred here, went up that crazy amount of 130-something%, went down, consolidated here in that post-pump ranging that typically occurs, and then the aftermath was not great. Price did go lower. This is the first coin that I do want to introduce another topic of technical analysis and price action. And this is not on the presentation, but this is something that I do want to show. Within the post-pump ranging, a large amount of transactions are going to be occurring in a tight range. So what this is going to mean is that when price reaches that range again, that's going to act as strong resistance. Where did that occur? Here. Meaning, at this spot of that post-pump range, right there, we know that a large amount of volume and a large amount of price fluctuations happening there. So when price comes back to there, it's going to have a hard time going higher. Happened right there, price went right back down. Happened right there, price went right back down. Went a little bit higher here, price went right back down. Why does this occur? Well, we can expect that many buyers were probably entering into the market here. Maybe some even traders who had bought the pump at around these prices. Maybe traders who had bought after they saw this crazy 125% rise. They buy in consolidation. So we get a lot of buyers here. With a lot of buyers who go underwater, what do they want to do? They want to break even. They want to sell at a slight profit or at no loss. So where can they sell it? Break even. Here. That's why we got that one. They sold here, and they sold here as well. This got probably the rest of the traders who wanted to be break even out of the market. So this is another thing that can occur. And if we look at, if we look at Wings BTC, I don't know if this one had, I think this one may have just, this was a weird one. We had this kind of post-pump range of about here, around there, and we do have price going back to that and then resisting and then going back down. So sort of, but I think it fit more with the NAV example. Now I don't want to confuse traders here because when I say post-pump range, here I'm talking about just like a few hours. Right there, lowered volatility and gradual fall in volume. I found two kinds of post-pump ranges. The first, which is that, just a few hours, where we see that kind of happening here. Just a post-pump range of like an hour. Post-pump range of like an hour here. But then when we zoom out, and here we're on the 1 minute time frame. When we zoom out and go on the 1 hour time frame, you're going to see a lot more of this occurring. And that's also going to be just a more zoomed out post-pump range. And it's that zoomed out range that's really important to look at for future resistance. And you can also do this with the volume profile. If we were to look at NAV BTC, which had that beautiful just, resistance right at where the range was. Why? Well, if I get the volume profile up, change it here. Yep. There you go. Where was the largest amount of volume transacted from this point in time to here? Here. Clear as day. So with all of this volume being transacted here, that formed resistance there, and there. All right, so the other one that we wanted to look at was data, which is here. This one, I think, fits more into model 1, where we go pre-pump, pump, dump, and a bit of post-pump ranging before we get the aftermath going a bit lower. Price finished here at 692. Where is Data Coin now? Again, Data Coin did not do too well, but look here. What happened to the post-pump range? We have this pump, we have this post-pump range forming right there. Let me just highlight that. It became resistance again. It became resistance right there as break-even traders sold. Boom. And it became resistance. I'm just trying to shift-click it here. It became resistance here as well. As you can see, price was not able to go higher than this post-pump range, so price went lower. Break-even traders may have gotten out here, but I looking at data BTC and looking at just how high that tail is, I'd expect that a lot of traders are probably underwater in long positions at these prices here. So probably a lot of buyers who bought up there. But the ones who had bought in the range probably got out there. So this is more Model 1 as you can see. So how do we take advantage of these pump and dumps? Number one rule, do not buy a pump. Do not attempt to buy a second pump either. Just because I'm showing this model here, hey, after that first retracement, we buy that second pump, right? No, because what might just occur is the dump might just go like this, go up a little bit, you buy, and then price just keeps going lower, ranges, and then just really goes low. We don't know. We don't know ahead of time if we're going to even get a second pump. So I would not recommend trying to buy that second pump, and especially not recommend trying to buy an initial pump because that's just falling for really a trap that these traders are setting. Now, if you own a coin that you believe is being pumped, I would advise, or no financial advice, of course, but I would recommend looking for a spot to sell. Because when coins go up, 100% all at once, it can only go up so much in a short period of time. And if you see a massive rise after 1 minute and then price just seems to stall, that could be a sign that the price is about to dump. As there aren't any buyers and the limit sell orders are really picking up, bearish pressure heightening, price goes down. Third is avoid trading coins that have recently been pumped and dumped. I mean, this one, if you look at all these coins here, they did not have good futures. Futures is not the greatest term here because, different market. They did not have the greatest outcomes here. The best outcomes that happened after, such as for data BTC, is it went right back up to value, up to that the post-pump range here, but really it can't go much higher than that. So I would not try to recommend buying anywhere here because, unless you want a 20% loss on one of these or an NAV BTC, trying to buy in the aftermath of any of these is just not really the best idea, as you can see here. The fourth is just take advantage of the post-pump ranges that can form really good resistance, and you can throw on the volume profile there as well. Those areas can have a lot of sellers who just want to get out at break even, and we can take advantage of that by just selling before they sell in that post-pump range. So if you do own a coin that is deep in the aftermath of a pump and dump, so let's say you own a coin in this stage. Again, I would not recommend buying in this stage, but let's say you do. Let's say you bought here anyway, and you survived the stop loss hunt that came down to here. You may want to sell here, and you may want to sell here. Why? Is this just 20/20 hindsight? No, it's actually the post-pump range here. This post-pump range is going to have a lot of those sellers, so this is the kind of range that you might be wanting to look to sell to get out where these traders are getting out break even. So, you buy here, you sell there, or you sell a little bit higher. So that's going to do it for just a strategic look at pump and dumps. Again, with something as high volatility and rapid as a pump and dump, do your own research. These models can be helpful. Let me just go back to those. These models can be helpful, but of course, you're going to want to do your own research, look at your own patterns, and decide if you want to, trade a certain way. But for the 40th time, I'd recommend just be careful around pump and dump groups because, of course, they're going to want to promise endless profits because they're just trying to get more users to buy so that they can sell at a better price. And the more users they get, the better the price they sell at, the more money they make. So there is an incentive for these guys and girls to get as many people as possible on their group and on their platform. So keep that in mind, and try to be the shark in the pump and dump technical analysis world, and try not to be the fish getting duped into buy on bullish momentum. So with that, happy trading.